Hello and welcome to this, our last episode of the BLM Property Damage Flood podcast series. My name is Elizabeth Harvey and I'm an Associate Solicitor in the BLM Property Damage team. Today my guests are Sarah Brodie from the ABI's General Insurance team and Dermot Kehoe from Flood Re. Today's podcast is all about Flood Re, its origins, how the scheme functions, what Flood Re hopes to achieve by 2039, and some of the challenges it faces. Welcome, Sarah and Dermot, and thank you for joining me. I want to start with the situation which led to the Flood Re scheme being established. The market wasn't working for both homeowners and insurers. Sarah, why was Flood Re necessary?
So, flooding is the biggest natural catastrophe risk facing the UK, and insurers pay extremely high amounts in relation to flood damage claims. So, for example, pre-Flood Re, pre-2016, the total insurance payments relating to the 2007 floods was estimated in the region of £3 billion. And absent of any other interventions in the market, properties at significant risk of being flooded face higher insurance premiums. And it's this dynamic that led to many properties facing flood exclusions from their insurance, very high excesses, and costly premiums. With hundreds of thousands of properties at an increasing flood risk, the insurance industry and government had to sit down and work together to find some solutions. So this resulted in Flood Re being set up in 2016. And this scheme allows homeowners to access affordable flood cover and also enables the insurance industry to gradually move towards a competitive risk market by the end of the scheme in 2039. The scheme was created jointly between the UK insurance industry and the government, and it was implemented by the Water Act 2014.
Thanks, Sarah. You can see there exactly why change was needed. Dermot, could you explain how Flood Re works in practice?
Of course, Elizabeth. Flood Re was designed to ensure that the experience for the consumer remained the same. So a consumer buys their insurance policy from a high street insurer or a broker or a price comparison site as normal. If there's a large flood risk to that property, the insurer may decide to pass that element of the policy over to Flood Re for a fixed premium. The fixed premium that Flood Re charges that insurer is fixed on the basis of the property's council tax band. So that means there's a cap on how much anyone has to pay in order to get the flood risk covered. If the householder unfortunately needs to make a claim, they make that claim as normal through their insurer, and when the claim is settled, Flood Re will then reimburse the insurer. Importantly, Flood Re also provides a cap of £250 on any excess on a Flood Re policy for flooding, so you shouldn't have to pay any more than £250. Flood Re is funded by a levy on all the UK home insurers, which totals £180 million. And there are also some exceptions to the scheme as well. The scheme doesn't cover commercial properties, for example, and nor does it cover properties built beyond 2009. And the reason for that is because all properties built since that date should have been built in a way that is compliant with regulations and therefore are not at risk of flooding, are not built on floodplains, and do not make flooding worse. Since Flood Re was established in 2016, people have seen a dramatic increase in both the availability of insurance and its affordability. So, for example, now 93% of households who've experienced previous flood claims can now get quotes from 10 or more insurers. And those quotes are now, for most of them, half the price they were before Flood Re was established.
That's great, thanks, Dermot. So a big change from the situation previously. Dermot, could you explain what it means to have a risk-reflective market and how Flood Re plans to achieve that goal by 2039?
Yes, well, when Flood Re exits the market, what it hopes to leave behind is an affordable, risk-reflective market where the market price charged by insurers is affordable to householders and also widely available. We believe there are three things that need to be true in order for that to happen. The first of these is that there needs to be less flooding. The second is that if it does flood, that flooding should do less damage. And thirdly, we need to have an effective insurance market operating. So on the first one about there being less flooding, it's really important that government continues to invest at very high levels in flood defences. And it's also very important that planning regulations are enforced even more than they are now, and that in the future they are not relaxed and therefore create more flood risk. Secondly, in terms of when there is flooding, to ensure that there's less damage, we believe there needs to be a much higher take-up of property flood resilience measures across the UK, and we are looking at ways that we can encourage and incentivise that, for example, through Build Back Better. And thirdly, we believe there needs to be an effective insurance market, and that means insurers need to continue to offer flood cover as standard in home insurance policies, and it also means that householders need to be informed about what their risks and what they can do about them, and take reasonable steps to make themselves more resilient or resistant to that flooding.
Thanks, Dermot. Sarah, what do you consider to be the challenges to creating a well-functioning market?
So climate change is dramatically increasing the risk of flooding in the UK, with projections showing a higher likelihood of more frequent and intense rainfall and an increase in severe weather events such as flooding and sea level rise. As Dermot explained earlier, properties built after 1 January 2009 were excluded from the flood scheme to ensure inappropriate building in high flood risk areas is not incentivised. However, we continue to be concerned at the increasing number of properties at risk of flooding. And this is why we have long been calling for the government to ensure there are no inappropriate developments in flood risk areas and to encourage a more transparent planning application process. Alongside investment in flood defences, and we have the magic number at £1.2 billion annually should be invested in flood defences to deliver very high levels of protection as identified by the Environment Agency, we think it's essential that flood defences are adequately maintained. So the ABI and Flood Re jointly commissioned a research report looking at the impact of investment on flood defence maintenance. And this study found that for every £1 spent on flood defence maintenance, £7 is saved in spending on new defences. And I think this is a really interesting figure for how the government can invest more smartly to reduce flood risk. So it's something we'll be feeding into the government's upcoming comprehensive spending review consultation. There are also other measures we think could really help reduce the impact of flooding, such as increasing the use of sustainable drainage measures and property flood resilience measures.
Thanks, Sarah. There's certainly some very interesting figures in that study. So in summary, we've discussed how Flood Re was set up as a long-term plan to transition the UK insurance market to a well-functioning market that offers affordable flood risk cover to consumers. How the Flood Re scheme works by offering insurers a reduced premium, homeowners a flat excess payment, and how the scheme requires insurers to pay out initially and be reimbursed by the scheme. We've also covered the need to reduce UK flood risks, the costs of flood cover, and the need to raise awareness amongst the public about flood risk and what can be done to prepare for these events. We've also discussed some of the challenges facing the Flood Re scheme and the insurance industry in general. Thank you, Sarah and Dermot, for joining me today, and we hope you, our listeners, have enjoyed our conversation. It would be great to hear your thoughts and feedback on this podcast and the series generally, so please do send them through to propertydamage@blmlaw.com. That's propertydamage@blmlaw.com.